The Home Mortgage Law Show is a paid program and is intended as a resource guide for education, information, and entertainment purposes and is not intended to provide specific legal advice. The information that you hear should not be used as a substitute for competent legal advice from a professional attorney. Hiring of an attorney is an important decision which should not be based on advertising or the information that you hear today.
Good afternoon and welcome to the Home Mortgage Law Show, brought to you by the law firm of Morris duPont and Regal Tax Advisory Group. Full house today of attorneys. We have attorneys Will Morris, Shay duPont, and Michelle Hanash, our bankruptcy attorney, joined by a special guest today. We'll tell you all about that coming up. But first, our phone lines are open. It's toll-free to call the show and talk to the experts. 866-610-NEWS, 866-610-6397. AT&T Wireless customer, star 610. On Facebook and Twitter, it's the Home Mortgage Law Show and Morris duPont, PA.
Hi.
Hi,
Hello.
Will.
We're here.
Yes, we are, sir.
Yeah, live and everything else. Wait, did you go away to Tampa this week?
No, I'm going next week. I'll be in Tampa. I'm usually working out of the Doral office. This is Shay, by the way. I'm usually working out of the Doral office, which is a suburb of Miami. And every other week I go to Tampa. So because you were on vacation this past week, Will, your one-day your one-day vacation. He was supposed to be out the whole week, and every day but one I saw him in the office. I liked the business from the waist up, party from the way down.
I was wearing a jacket and a shirt with jeans.
And a tie.
With a tie, yeah, that's right.
And a tie.
And
jeans. I was like, well, you're here under protest. Is that
protest.
it? And he was like, yes, I am. So that was very interesting. So you didn't get any vacation time, really?
1 day. 1.5. Okay, you want to be technical. I took yesterday afternoon off.
Well, what did you do yesterday?
We should talk about that.
Okay.
Me and the lovely Michelle.
Why did you work yesterday?
We had...
While I was at the Sony Tennis.
Right. We had an evidentiary hearing in bankruptcy court. Myself, Michelle Hanash, and her lovely mom was there. Ziona. That's right. I know I was going to butcher the last name, so I didn't even try. So, yeah, we were there. Kopolovich. Nice.
Who I think we should clarify is a bankruptcy attorney. She wasn't. It would be nice to just have her there.
Right.
but there was a reason.
Michelle had her mom at her hearing.
Right. So
was she taking pictures?
I think she tried.
Did she take you to lunch after?
We did.
We did go to lunch.
We did go. We went to La Logia right next door.
Yeah.
So of course you have to go to La Logia.
Yes. Every lawyer in town was there and a couple of judges.
All right. So we've got Michelle Hanash here, our bankruptcy counsel, and you had a big hearing yesterday?
Yeah, we had an evidentiary hearing related to a motion to value. So what a motion to value is, where we're trying to reduce the market value of a property, or I'm sorry, the mortgage of a property based on the market value of that property. So as we've talked about, when you have investment property, so non-homestead property in a bankruptcy, you can take that mortgage and you can cram it down to the fair market value of the property. And in this case, we had actually stipulated to the appraisal of the bank, completed by the bank.
Right.
And the only issue is that their appraiser accidentally, let's say,
didn't notice
the cost to cure some extensive roof damage and termite damage and fumigation issues. So we said, we'll agree to your appraisal, just we need an adjustment for these costs to cure. So we were all ready to go. We had our Truly Nolan, our roofer, our client, an appraiser there to explain how appraisers do take into these account these issues from the cost to cure. And then I have to say, on the judge's urging, the bank was finally willing to settle with us to resolve the issue.
Sometimes you need to prepare and go all the way up to the starting line before the other side decides, well, you know what, we should fold.
I think usually you have to
right.
show.
And in this case, absolutely. I will say normally when we have valuation motions, I'd say the banks are very willing to work out some kind of a reasonable agreement.
Way beforehand.
Right. Within 30 days of the motion being filed, usually that happens. Or maybe the sides will take appraisals if that hadn't been done yet. But in this case, the bank would just not settle.
Right.
They wouldn't give any counteroffers. They would just reject my settlement offers. And then finally, when we got to court, we were able to have a settlement worked out.
I consider it a total win.
I do too.
Congratulations.
So the good news is for this client, we were reducing the mortgage value of a property from about, let's say, $188 or $190,000. We were already reducing it to $153, and now we got an extra approximately $10,000 for those repairs to reduce
Wow.
that mortgage down to about $140,000.
Congratulations.
Excellent.
Thank you.
Nice
Huge
job.
win.
Yeah.
Fantastic. Love to hear that. Well, that was worth it, Will.
Yeah, we had a blast.
That was very nice of you to attend Michelle's hearing.
Well,
We back each other up.
But for me, it wouldn't have happened. But I'm not gonna say it.
Just his presence
Absolutely.
was awe-inspiring.
Well, the lawyers at the law firm of Morris DuPont were in court every day, whether that be Monroe, Miami-Dade, Broward, Palm Beach, Pinellas, Hillsborough,
Monroe.
I mean, East Coast, West Coast, we've got you covered.
All around.
Absolutely.
I've got the miles in my car to prove it.
And Michelle, bankruptcy, what's going on in your department?
Oh, well, we're in the process of stripping some second mortgages in Chapter 7s, which I always like to bring up because it's still, I remember back in the day when just stripping a second mortgage in a Chapter 7, you just never thought that was going to happen.
Right.
You thought you had to be in a Chapter 13 bankruptcy for 3 to 5 years to be able to get rid of second mortgages. And now we're doing it in Chapter 7s. I have one client whose second mortgage we're stripping, and also a homeowners association lien that had actually started foreclosure proceedings against her. She was on the verge of losing the property. And now we've stripped the HOA without even an opposition from the HOA. So I think the word has gotten out that this is what's happening in Chapter 7.
So let me ask you this. If I remember correctly, in Chapter 11, you had to go...
Whoa. Chapter 11?
Oh, 13.
Chapter 13.
I'm sorry. 13, you have to go through the period.
Right.
It would say it's 3 to 5 years of being on the plan before you're then eligible for the second mortgage or any additional liens to be stripped, right?
Right. So the stripping of the order gets entered when you have the hearing in let's say towards the beginning of the Chapter 13 case and now a Chapter 7 case. And then not until the debtor gets their discharge, so not until the 3 to 5 year period has passed, does that order become recordable, and does the lien actually get stripped.
Well, and so the difference from that in Chapter 7, it's an immediate stripping upon the discharge. You don't have to obviously go through any plans.
Right. Well, a Chapter 7 can be around 3 months. So it's really just the amount of time it takes to get everything done in a Chapter 7 and to give the creditors adequate time to respond and for all the administrative processes to occur. And so it's really just about, what we would call immediate. It takes about 3 months to get all that done, maybe 4 in a Chapter 7. And then immediately your second mortgage or the claim of lien from the homeowners association or condo association will be stripped.
Amazing.
That's amazing.
Now, is this case law is this solidified where we're going to, from here forward now, be able to see the stripping of unsecured seconds in Chapter 7? Do you think that, we could possibly see that stop?
If there's an appeal that reverses it's currently up on appeal. So if that appeal goes forward and reverses the decision, then going forward, we would no longer be able to strip in Chapter 7. So now might be the golden time to get into Chapter 7 and try and strip second mortgages.
So, folks, I hope you understand this. There's this incredible opportunity right now, this window that is open right now to be able to strip off your second mortgage. Think about that. You owe $150,000 on your first mortgage. You owe $100,000 on your second mortgage, and your property is now worth $145,000. We can strip that second mortgage right off. $100,000.
Gone.
In 3 months.
1-800-974-2712. That's the toll-free number to reach the experts, the Morris DuPont firm, 800-974-2712. 1-800-974-2712. After the break, much more of the Home Mortgage Law Show. You're listening to the Home Mortgage Law Show, brought to you by the law firm of Morris DuPont and Regal Tax Advisory Group. It's that time of the year, tax time, 1-800-6000-TAX. That's the number for Regal Tax Advisory Group, 800-6000-829. In the house, attorneys Will Morris, Shay DuPont, Michelle Hanash, our bankruptcy attorney, and our phone lines, which are open for you, 866-610-NEWS, 866-610-6397. AT&T Wireless customers, star 610.
And we were talking to Michelle Hanash, our bankruptcy attorney, about the stripping of second mortgages, unsecured second mortgages, in a Chapter 7. But guess what? even better news, you don't even have to be in bankruptcy to get a second mortgage that is unsecured, actually forgiven by many, many lenders. We see it every single day. What do I mean by that? What does it mean to have an unsecured second mortgage? And I use that term mortgage simultaneously with the word HELOC, a home equity line of credit. So if you have a home equity line of credit or a second mortgage that is junior to a first mortgage, there is a chance that you might be able to either strip it completely, have your lender forgive it, or have it greatly reduced. Can you imagine if your lender just agreed to forgive $100,000 of debt that you owe? Well, we're seeing it more and more.
I can imagine if it's not going to happen for me.
You don't even have a second mortgage, you smarty.
He wishes he had a second mortgage just so he could strip
I
it.
want it stripped.
Right?
How about that?
Because it's so exciting
right,
to think
it's
of.
so good, right.
So let's give you another example. I did it before. It's a $150,000 first mortgage and a $100,000 second mortgage or HELOC. Now, if the value of the property is $149,999, and that would mean that the second mortgage is unsecured because the value of the property is less than the value of the first mortgage. The first mortgage is $150,000. The second mortgage is $100,000. The value of the property is $149,999. That means that there is no equity for that second mortgage to go after. But if the value of the property is $150,001, that means that there is $1 of equity for that second mortgage. And in that case, Michelle, could you strip that second mortgage in a Chapter 7 bankruptcy?
No, you wouldn't be able to, even with 1 penny of equity. There has to be 0 equity in that second mortgage. In other words, negative equity.
Exactly. But in loss mitigation, we can probably still get that second mortgage forgiven. So there are different options out there for you if you have a second mortgage, and we can argue valuation like Michelle did in her hearing yesterday with great success. We could argue that the value of the property was less than the first mortgage and the second mortgage holder should forgive the second mortgage completely, or they should settle for the value of that second mortgage. What is the equity position that a lender would have in my scenario?
The $1.
It would be $1.
There you go.
We'd be happy to settle with you, sir, for $1.
4 quarters.
We'll give you $1. So,
I'll give him 2.
What the heck? You splurged.
So generous.
Yeah.
We'll double it. So as you can see, there's lots of options if you have second mortgages, and this applies not just to primary residences, but it also applies to investment properties. But we know a lot of people took out a second mortgage on their property in order to do a down payment to buy that investment property. It doesn't matter what you use the HELOC money for. It doesn't matter if you went and started a business with that money, or if you invested it in the property, or if you went out and bought an investment property. It can be forgiven. The lender doesn't care what you did with that money. It cares that they no longer have an equity position in the property. So certainly something for anyone out there to think about. If you've got a second mortgage, what are you waiting for? Call the law firm of Morris DuPont and let us check and see what we think might be your options. Call 800-974-2712. That's 800-974-2712. Remember, if you can hear our voice, there's an office nearby. You can check the office locations on our website. That's homemortgagelaw.com. homemortgagelaw.com. There's the locations. There's also maps, frequently asked questions. We tried to put a lot of stuff on the website to help you and to be able to answer those initial questions you might have. Office is available: St. Petersburg, Tampa, Dadeland, Doral, Aventura, Fort Lauderdale, Plantation, Boca Raton, and West Palm Beach. Natalie, I see we've got some calls there.
We do. John, welcome to the show.
Hi, John.
Hey, how are you guys today?
Great. What can we do for you?
Yeah, quick question for you guys. Listen, about 6-7 years ago, I was making a pretty good salary. I bought a condo here in North Lauderdale. I had about 7 credit cards and a typical car payment. And then I wound up getting laid off from my job.
Sorry.
6 years later now, I'm finally getting back on my feet. The only loan that I have not defaulted on has been the condo and my car payment. The second mortgage, I did default on, stopped paying. My question to you guys is, now that it's been 6 years later, if I choose not to file bankruptcy at all, won't the credit card debt start dropping off my credit report agency after 10 years? Either way, whether you're currently in bankruptcy or not.
We're going to let Michelle Hanash answer that, because not only does she manage the bankruptcy department at Morris DuPont, but also the debt settlement and credit restoration. So, Michelle?
It's actually less than 10 years that those accounts can fall off your credit report. And I'm not going to just say they drop off, because lenders have been seen to keep reporting accounts even beyond the statute of limitations for their time to report them on the credit report. So generally speaking, negative accounts are allowed to be reported for 7 years after charge off. So that usually results in about 7.5 years after you defaulted on a payment. Once that time period has passed, you can take measures to get these items removed from your credit report, and the lender shouldn't be able to stop that from happening. Now, even prior to the 7.5 cutoff point, we have been able to get items removed from credit reports. Oftentimes, accounts are not being accurately reported. There are other problems with the reporting of those accounts. So just because you're still inside that 7.5 year period doesn't mean there aren't other possibilities of getting those accounts removed. But it is less than 10 years.
So, Michelle, is it even feasible at this point, since I'm already 6.5 years into this, to do a bankruptcy?
Well, the issue is what's going on that would merit filing of bankruptcy. So if you haven't paid your debt in 6.5 years, you probably don't have personal liability. Let's speak specifically in regards to your credit card debt. I don't think they would be able to sue you to collect on that debt. Now, if you had other issues going on that could make sense to file a bankruptcy, if you decided, even though you're not personally liable on certain debt, you wanted to try and get caught up on a mortgage, or you needed to clear up your credit and you had tried credit restoration routes, there could be a reason why you would even file a bankruptcy under those circumstances. But if you're just worried about the issue of credit card debt, it should be coming off your report, or you should be able to get it removed from your report fairly soon. Correct. And the other issue is your car payment. Is that you hadn't paid?
Or
second mortgage. I'm sorry.
My car payment is current, and my first mortgage is current. So I guess my question is, if I go to your firm today and file bankruptcy, let's just say either Chapter 7 or Chapter 11, that would start me a fresh 10-year period of a bankruptcy on my report versus not doing anything and having most of the bad debt fall off within a year and a half anyway.
Right. But we're not just looking at what happens to your credit report. Oftentimes, when we're trying to seek a solution to financial problems, the credit report, although important, is the last step of the equation. So I'm not almost ever going to tell someone whether or not to file a bankruptcy because of the implications on their credit report. You have to look and see what you can do with your second mortgage, which seems to be the other issue, and whether or not you have to file a bankruptcy to take care of that, or whether or not you could potentially settle it, or whether you don't need to settle it. And then you can decide what the proper course to take is. But yes, but one thing I have to back up and clear up. If you enter into a settlement agreement on any account, that restarts that statute of limitations period from the settlement date. So if you have to take affirmative steps to either settle a mortgage or file a bankruptcy, it's the difference of a couple of years that they could potentially be on your credit report.
Okay, Michelle, what's the name of your website again?
It should be thehomemortgagelaw.com.
No, it's not the Home Mortgage Law, you coon.
I never give that information out. I was looking at Shay's face as I started.
You should have waited 2 more
seconds.
seconds.
John, it's homemortgagelaw.com, or the name of the law firm, Morris, Morris. DuPont, DuPont, MorrisDuPont.com or HomeMortgageLaw.com. You can get there either way. But I'm with you, John. I think, look, you're 6.5 years out. Keep your fingers crossed for another 6 months and hope nothing happens. They've charged off the second. It's probably long gone. They've charged off the credit card debt. Yeah, I think you're sitting pretty.
Maybe we negotiate a release of lien if that becomes an issue.
Yeah. If it becomes an issue.
Thanks, Michelle. Sure. I appreciate it.
Take care.
And you're listening to the Home Mortgage Law Show. 1-800-974-2712. 1-800-974-2712. On Facebook, the Home Mortgage Law Show. On Twitter and the website, it's Morris DuPont, PA. 800-974-2712. More calls to get to here on the Home Mortgage Law Show right after this. You're listening to the Home Mortgage Law Show, brought to you by the law firm of Morris DuPont and Regal Tax Advisory Group. Full house of attorneys today, led by Shay DuPont, Will Morris, and Michelle Hinash, our bankruptcy attorney. We're taking your calls. It's toll-free, 866-610-NEWS, 866-610-6397, AT&T Wireless customer star 610, and we're also on Facebook, The Home Mortgage Law Show, and Twitter, Morris DuPont PA. Let's hit the phones with Kevin. Hi, Kevin.
Hi, Kevin.
Hi, how are you?
Great. What can we do for you today?
Good. Well, I'm listening to your show, obviously, and I'm intrigued about the stripping of the second mortgage potential.
Yeah.
My situation is a little unique. My wife and I, or wife at the time and I, bought a house in Tampa back in May of 2006. We paid $598,000 for the house. The first mortgage was through Wells Fargo. It was a Freddie Mac, I believe, for $417,000, the max at the time you could take out.
Mm-hmm.
And my company loaned us another $125,000 interest-free for 5 years with a balloon payment due in May of 2011, or at any time when I quit the company, which was coincidentally at the same time. Now, we have not yet paid the loan back because of another issue. My wife has the house. I've signed a quitclaim deed to her because part of the divorce settlement was to allow her the opportunity to refinance the primary mortgage through a Harper Hemp program, which I think I'm a little bit familiar with.
Yeah.
But what's complicating that effort is the fact that we still have this $125,000 loan outstanding with my ex-employer.
Right.
And I'm just not sure if the forgiveness of these second mortgages, if it's really that to begin with, is somewhat subsidized by a similar federal program to HARP, or it's just not applicable in this situation.
What is the current market value of that property?
Listening to your show, I would say the market value is right around $345,000, which is awfully close to the balance of the first mortgage with Wells Fargo.
And who is on the note for the second? You alone, or both you and your wife? Ex-wife.
Both of us.
Both you and your ex-wife are on the note. Ooh, boy, that's very complicated. Never good to get those seconds from family members or that kind of business. We see those every once in a while because, it's not like what happened is that all of these lenders, Wells Fargo, GMAC, Chase, Citi, Bank of America, SunTrust, Ocwen, all of these lenders got into big trouble with the Department of Justice, and there were 48 attorney generals around the United States, and they settled for billions and billions of dollars. And part of that settlement said that they would have to pay those billions of dollars to the Department of Justice from 3 years from the date of the settlement. But, and this is a big but, they could take credits for any principal reduction or principal forgiveness that they did for any of their borrowers. So that's when they started forgiving these unsecured second mortgages and giving principal reductions on loan modifications. So when we're talking about this stuff, we're always talking about presuming that you've got a mortgage with one of these big lenders. Right. Now, it's different talking with Michelle because what she was talking about was stripping, having these forgiven or being released of personal liability through a Chapter 7. So, Michelle, would you address this in the context of a Chapter 7?
Well, the issue here is we have lien stripping and we have personal liability on the note. So let's say his ex-wife, Kevin's ex-wife, filed a bankruptcy and was able to strip that second mortgage. Kevin's still liable on the note. So that could be an issue. It might strip the second mortgage from the property, and that's one of the two issues, but Kevin could potentially have that liability with that second mortgage, which, could be settled. It's not that there's no solutions there, but the stripping of the mortgage isn't going to take care of everything unless Kevin is involved in his own bankruptcy or is able to then work out a settlement.
Right, so that's what I was going to ask. Why are you limiting the bankruptcy only to the filing by the wife?
Because they're not married any longer, from what I gathered.
That's correct.
Correct.
Okay.
That is correct. And the other good thing that I did was, knowing that I was going to try and negotiate somewhat of a lower payment back to my ex-company of the $125,000, I kept in escrow her half of that so that if I did settle, I'd pay off a reduced amount and share with her the balance of the savings that I was able to attain. So even if she goes into bankruptcy, I still have her half to pay them back.
Well, it's not a great situation. We don't have, a great solution for you, unfortunately. There's ways of negotiating probably, but, depends on what kind of negotiations and how hard you want to negotiate. Michelle?
I'm not sure I understood exactly what was being talked about with the wife's half, but it just raises an issue of assets for the wife, that money might not actually be there in case of a bankruptcy. So you really would need to talk with a bankruptcy attorney, both you and your ex-wife, about that.
Yep. Okay.
But thanks for listening to the show. We appreciate it.
Thank you very much. I appreciate it as well. Take care.
All right.
Let's go to Ruben. Hi, Ruben.
Hi, Ruben.
Hi, good afternoon. Can you guys hear me okay?
Yeah, fine. What can we do for you today?
Okay. Well, I'm about to pay off a car in May.
You're what? I'm sorry?
I'm about to pay off a car in May.
Oh, okay. Congratulations.
Thank you. But my credit is horrible since I haven't paid a credit card in years, and I might have maybe about $15,000 in debt, and it just times get hard at work, reduction in pay, different hardships.
Sure.
So I just start paying those things off first. Can the credit card companies come after me for my vehicle that I own now, or that I will own in May?
Generally, what happens is if you default on a credit card, that lender has the ability to sue you in the court, in state court, and get a judgment against you for the amount you owe, and then they can satisfy on that judgment. And part of that could involve taking some of your assets or having a lien on a vehicle that you own. So that is possible. That could happen. What I want to know is, when did you default on your credit cards?
It's been years, and it's even to the point that I even tried settling with some of them, and it became so hard to actually keep up with those payments that I just pretty much just gave up on everything. So it's probably been a few years since I've actually even made a payment on anything.
Oh,
Well,
so interesting.
yeah.
Interesting,
Do you
right,
think-
Michelle? Because you talked about the difference between when you default on your credit cards versus when the lender charges them off versus if there was any settlement. So these dates are all very important
Right.
for anyone who is considering trying to get released of obligations, and especially for poor Ruben, because if he now is going to own this vehicle outright, so he has this asset. If one of these credit card companies gets a judgment against him, they could certainly go after his car and repossess the car at any moment, correct?
They can have the
to
sheriff's gun again,
repossess, right. So repossess would be if they were the car lender themselves.
They can essentially seize it. They can have the sheriff come out and execute on the judgment and seize that automobile.
Absolutely.
Right. Well, we had that situation actually, unfortunately, where we were trying to assist some clients who had that done exactly to them. But what we want to know is really when you entered into settlements with those credit cards, because there's two issues. One is the issue of whether or not they have a legal claim against you, which we spoke about earlier, and two would be for the credit reporting. So it's very important to know when you did enter into those settlement agreements with the lenders, because that's really the date we're going to look at to see if they have the ability to come after you and sue you. Now, if they can come after you and sue you, then we can talk about debt settlement to try and resolve the issue. On average, we're settling credit card debt at around 35 cents on the dollar. So we can work out a settlement agreement with the lender to prevent them from suing you, to prevent them from seeking a judgment against you, and to prevent them from going after your assets and your vehicle. So you don't want to just ignore the situation. You want to make the proper observations about when you made your last payment to know if they're still able to come after you, and then we can decide with the proper course of action to prevent them from coming after your car.
Right.
Right.
You don't want to wait until the sheriff's knocking on your door and you're suddenly woken up to the fact of, hey, I might be in trouble here.
Or you go to the parking lot and your
And the
car
car's
just
not there,
isn't
right.
there, which was
Oy.
what happened to our clients.
Oh, that's scary.
Yeah.
Very.
So, before I seek bankruptcy, should I go ahead and maybe contact some of those credit card companies that are on my report? And
Well,
No, I think what Michelle is saying, you need to start looking at the dates to make sure whether or not you want to go
and
back.
you should be able to get that information possibly without even contacting those lenders. You can look at your credit report and see the date of settlement probably would be on there. You can look at the papers that you received. You should have received a settlement letter from the lenders. And if you need, you can contact them. But try and go through that on your own, just in case you are within that statutory limit.
So then if I do decide, because the only thing that I'm really getting in the mail, I haven't gotten anything from any lawyers or anything. All I get is something in the mail saying you could settle this account for this much. You can make this much. This
Reuben, I
amount of
want you to
payment.
save all of that. I want you to keep it in a file, and I want you to call the law firm, schedule you an appointment, and come talk to Michelle, and she can help walk you through it.
Thank you so much for
You're
your
so
help.
welcome.
You're welcome, Ruben. And that number is 1-800-974-2712. 1-800-974-2712. One more time, it's toll free to reach any of the attorneys. Michelle, Will, Shay, the whole team at Morris DuPont. 800-974-2712. Much more of the Home Mortgage Law Show right after this. You're listening to the Home Mortgage Law Show, brought to you by the law firm of Morris DuPont and Regal Tax Advisory Group. We have attorneys Shay DuPont, Will Morris, and Michelle Hanash, our bankruptcy attorney, taking your calls right now. It's toll free to call the show, 866-610-NEWS, 866-610-6397. On the phone, Rocco.
Hi, Rocco.
Good afternoon, ma'am. I just got a question for you. I haven't got any dilemma. I'm in pretty good shape as it goes.
Congrats.
Good for you.
I would wonder, how can credit card companies, like that gentleman was on before, I can't remember the exact, like 5-8 minutes ago, he owes $50,000. How can they let something go out of control like that they can't put a stop to it and do something that's right?
Who's they?
Who's they? Right.
The credit card
Oh, the
company.
credit card company. Well, I don't know. The credit card company is in the business of extending credit in the hopes that people will pay it back. I mean, it's, you know what?
Or in the hopes that they take a very long time paying
Right,
it back so
exactly.
they can get
You
as
see,
much interest as possible.
He does have sort of a point. I remember a few years ago when this crisis started, credit card companies are across the board cutting people's credit limit.
Well, yeah, is there some sort of algorithm that the credit card company uses so that the minute they see that you're starting to default on one credit card, that the other credit cards start clamping down?
They kind of do.
You know, it's tough because, as Michelle said, you know, and Will said, they're in the business of lending money, so that's what they're going to continue to do. If you were a great paying customer for 15 years, well, your credit limits are probably on each card are well over $10,000. On your Amex, there is no credit limit very often. So here, everything was going great for 10, 15 years, and you've got a credit score of over 800, and life is good, and you and your spouse are both working at your $150,000 job, and then what? Well, a divorce happens, or, God forbid, a spouse dies, and you're trying to cut your expenses even now that your income is been cut in half, and you're trying to cut your expenses, and you're trying, but you can't just do it magically. It takes months and months to cut expenses, and a lot of times it's not realistic. You think you can cut it and keep going, and you try month after month after month, but your credit card balances keep building and building, even though you used to pay off your credit cards every month. Now, the first month you leave $5,000 on, and then the second month you leave, and it just, it's a snowball effect, and people don't mean to do it. It's not like we're talking to deadbeats here. We're talking to people who have suffered financial hardship one way or another through job loss, cutting of hours, overtime cut, medical expenses, divorce. It's awful when it's a death. I mean, I have women calling me in tears. They never dealt with the finances of the marriage before, and suddenly here they are after 30 years of marriage. Their spouse suddenly died. They are completely at a loss to understand how to do all of this, and it takes them months to be able to manage all of this. And in the meantime, they're defaulting on a second mortgage that they didn't even know was on the property.
I'd like to say one thing. It probably would help. Any women or men out there that are married should talk, and each other should know what their expenses are and what they owe on the expenses. That's all. It's just a word of advice. I don't need any advice right now, thank God.
There you go. Well, good for you.
I appreciate talking to you and putting that out for everybody. I'm just talking for everybody. I'm not talking for myself. I don't need no help. Thank you. And I appreciate you taking the call.
Sure. Thanks for listening to the show.
A word of advice there. Talk
I'm
to your
so glad
spouse.
he's just so perfect. But
Talk to your
unfortunately,
spouse.
there's a lot of us that aren't.
Right.
But I think that was a great, great piece of advice.
Sure.
And we'll say it again to anyone out there. If you are married, make sure that your spouse is completely aware of your finances. And don't let your spouse get away with saying, oh, no, I don't need to worry about it. You handle it. That's fine. No, maybe it's during tax time once a year. You go through every account, every debt that you both have. You need to talk about this, know where the important papers are for each account that you have, so that if, God forbid, something happens to one of you, the other one is not left in complete darkness.
Right. And, going to the point of how the credit card companies let those debt limits get so out of control, what you were speaking of earlier, where the credit card companies do have these measures of credit worthiness and how they're going to keep someone's account open or close it. Let's say someone defaults on an account, and the credit card company responds by eventually closing their account. It's that interest that snowballs the balance. Mm-hmm. So it's not that perhaps the credit card company continues to lend, but if you have credit card debt, it is so easy for it to get out of hand, even if the account is closed and you're no longer borrowing any money, just because of that interest that accumulates.
Sure.
Good point.
And you see that on your credit card statements, that if you pay at the minimum, it will take you this
5
amount
years
to the rest of your
20
life,
years,
and then your kids will have to pay.
Right. Credit card companies,
Yeah.
not something you would take lightly.
We were talking about earlier with the statute of limitations. Maybe the credit card companies are beyond the statute of limitations of being able to come after you legally by filing a lawsuit against you and then getting a judgment. That doesn't stop their collection efforts. Their collection efforts go on. And most of the time, people don't understand that if they enter into any sort of agreement with the credit card company, they start that clock rolling all over again and give the credit card company the opportunity to then go back in court and file a lawsuit and get a judgment against you.
You have to be very
You have to be very careful.
Yeah.
Yeah.
And what constitutes settlement? Is that just taking a phone call from the credit card company and talking about
I think it's
potential
an
settlement?
Agreement to pay.
An agreement
Working
to pay.
out an agreement to pay on a debt you're no longer liable on.
Any sort of agreement, it could even go so far as an acknowledgement of the existing debt.
Right, so you have to be
So
very
a recorded
careful.
phone call where you're talking about even the potential of settling it could
Arguably,
open.
absolutely.
Oh my gosh.
Yeah.
And
Yeah,
you have to be especially careful if you're communicating in writing.
Right.
Okay. Well, normally we're talking about mortgages and we're talking about things on your home, but we've got Michelle Hanash here, who heads up the bankruptcy, credit restoration, and debt settlement department at Morris DuPont. It's always interesting to talk to her, and it really reminds you that if you have debt, if you have outstanding debt that you cannot settle, that you cannot pay off, you need to talk to a qualified attorney who will just not steer you into bankruptcy, but will also help you understand what your debt settlement options are. Please, if you've got issues like this, contact the law firm of Morris DuPont. Schedule your appointment with Michelle Hanash. Our phone number is 800-974-2712. That's 800-974-2712. Remember, office is available: St. Petersburg, Tampa, Dadeland, Doral, Aventura, Fort Lauderdale, Plantation, Boca Raton, and West Palm Beach. Schedule your consultation. Stop having to worry every day about the debt. Stop having to worry every time the phone calls. Embarrassed if the phone calls while someone's at your house because you're not going to answer it. And they kind of figure out why if you are not answering your phone and there's someone there and you go, oh, yeah.
God forbid they see 800 numbers
we all know
calling
what
you.
it is.
God forbid they see
We
800
all
number
know.
calling you, right, Jay?
Yeah. So, it's hard to sleep at night. We know. Be proactive, settle this debt either through bankruptcy or debt settlement, but maybe it's time to get this done with.
Those phone calls from the credit card companies are no joke, and I think we're going to take a break shortly. I don't know if I have time to get into this story
Go
where
ahead.
I actually really got a taste of really what it feels like, and just that panic and fear when you're getting called nonstop by these
And it wasn't even her
unscrupulous.
debt.
Are we going to talk about the raccoon?
Yeah,
Oh
the
my
raccoon.
goodness. one of the great benefits you get when you have an attorney that's working on your debt settlement is that the credit card companies and lenders are no longer allowed to contact you directly. And so they have to deal with your attorney in order to work out some type of a solution. And I'm sure people listening right now have been having those experiences where you get those calls from 8 o'clock in the morning to 8 o'clock at night, and they are relentless. And although they're really not supposed to be threatening you and trying to frighten you or tell you they're going to come and take all your assets, they tend to do these kinds of things. So I think we'll go into what I experienced after the break.
1-800-974-2712. Toll-free number to reach the law firm of Morris DuPont. 800-974-2712. Much more of the Home Mortgage Law Show right after this.